So welcome back to another Edgewonk review, and today we answer the question, should this trader go from demo to live? Does this performance look good enough to go to a live account? And we're here back again with Moritz, my co-founder of Edgewonk. Hello, Moritz.
Hello.
So we have 60 trades over 3 months. He started paper trading in March, and he has been trading for a few years as far as I've seen. 2 trades per day. 6-7 trades a week. He has a return of 4%. Win rate is around 60%. The average P&L is quite low. His average loss is larger than his average winning trade. So that's definitely something we can look at. The win rate at first glance looks really good. What are your first thoughts here?
Yeah, I mean, whenever I see a negatively skewed risk-reward ratio, I feel uncomfortable. I think I said that before. It's just so hard to keep up that performance, and I think it will be way easier on the trader to try to improve those targets or slash those stops, but we can take a look at that later. The overall performance is positive, which is great. So there's definitely potential in the strategy, and I think we will see more if we go into the details.
Yep, we can see how, or is there a way to get this average reward to risk ratio up? That's going to be interesting. Let's take a look at the equity graph, just a short amount. So he was in a drawdown at the beginning, the first 30 trades roughly, and then he has turned it around. Has a good upswing, so currently it looks solid. The question is, how do we get the average P&L up? The win rate looks solid. So how do we get this up? And there are a few data points we can consult in Edgewonk. The first and the easiest one is always the trade management, to see if the trader is doing something wrong with trade management. And here we have the opposite picture from what we typically see. The actual performance is above the potential one. So blue is above yellow, which means he is actually making money by managing his trades in a positive way. So that's surprising, and we don't see that often. Then I've taken a look at this with Moritz just 5 minutes before we started. We were wondering how this came to be. And then the next logical step is to go to the exit analysis graph. And this is a very different exit analysis from what we typically see. So this is going to be the key for this trader, we believe here. Moritz, what do you think? What are your thoughts when we look at this?
If we look at the updraw, that is really interesting because some of his trades, I mean, they go up to 6R, 5R. A lot of them go to 3R, 2R. So that is definitely something that the trader should look at. I mean, there's lots of potential here to improve his take profits, to have wider take profits, maybe even establish a different trade management approach. Like you go to 1R, you move to break even, then you take profit at 2R, 3R. So we have a lot of room here to be creative.
Yeah, and for those who don't know what we're looking at here, this is the graph that shows the price movement for each trade. The green bar shows how much the price is moving in the favor of the trader, and the red part is how much the price is going against him. The green horizontal line here is where his take profit is. What we see is surprisingly that a lot of trades would have overshot the take profit by a big margin. So even looking at this just roughly, if he would have used a target that is twice the size of his current target, would put us around here at the 200 mark. And even then, it might not be unrealistic to push the target that far and still end up with a very positive performance. So what will happen is that some of the winners will fall out and will not reach this very wide target. So that's, I think, why you said moving the stop loss to break even or to a point above break even would probably make sense here, just so that you don't have trades where the price goes very close to the target and turns on you. So that's something, if you use very wide targets, you have to also factor in here, right?
Yes, correct. And we can see that this trader already has a good trade management approach.
Yeah.
But maybe it's a little bit too tight because his risk-reward ratio is negatively skewed. So maybe he can loosen up that a little bit. and then catch those larger take profits. That would be one possible solution, even though I don't know how exactly he manages his trades.
Yeah. So this is something that the trader should test out. The good thing about Edgewonk is because we know about that this is something traders want to test with their data, and they don't want to go through another back test or wait another 3 months to gather live data. What you can do and what you should do in this case is go to the strategy lab, and here we have alternative strategies. So what we do here is we enter, or the trader would add a new alternative strategy. He would select the setup here, and then Edgewonk pull in all of his trades that he has here. And what we would do, or what the trader has to do, is open the trades one by one, and then ask yourself, what is the different target approach? So assuming here we want to test a true X target, we can name that here. You have some area where you can write stuff. You open the trade, you go to your screenshots, and then you look at the trade and evaluate, would this trade have been a winner, a loss, a loser, or a break-even trade, or however you want to manage the trade differently. And then you capture this here in the alternative R multiple. And then you write down, was this a 2, 3, 4, 5R? And then you just go through that list. It might take maybe an hour, maybe 2 hours, but it will save you weeks of time doing it that way, instead of just doing another round of 6 weeks or 8 weeks or 10 weeks of trading on a demo account and seeing how this plays out. So it's a huge, huge time saver, and it will give you the answer for your question very quickly. And you can do different alternative strategies, different target sizes, different stop approaches. And this is definitely something we would recommend to this trader, because yeah, this is where we think is going to be a lot of potential profit that he could realize. The next thing we looked at is, because this is a day trader, he holds his trades for maximum of 1 hour. So you can see the average holding time is 40 minutes for his winners. He's cutting the losses much quicker. So whenever we see this, we go to the performance by time. And when you go here to the hour of the day, or even you can break it down into 30-minute intervals, that for day traders, there's a very, very well-defined window, an opportunity window, where the trader is making almost all of his profits. And once again, this is absolutely true here. This period around 10 a.m. after the open, that's where he makes all of his performance. What do you want to say to that for day traders? What are your thoughts?
Yeah, I mean, it's interesting because this trader is a S&P trader, I think. Yeah, so he only trades the mini S&P or the micro S&P. And obviously, when the US stock market opens at 9:30, that's when most traders actually have an edge. This trader seems to be the opposite. He needs to wait for the dust to settle the first 30 minutes, and then he starts making his money. So either this guy should look into his approach to the first 30 minutes of the open. Maybe he's too eager to catch a trade. Maybe his strategy gives a lot of false signals. I don't know what is the case here, but fact is, the open is not profitable for this guy. And that is something he has to figure out now. Why is that the case? And until he figures that out, I would simply stop trading the open for now and start trading 30 minutes after the open at 10, because look where all the money is. It's wild.
Yes.
And then those 3 hours late after that, I mean, okay, there's still a bit of profit made, but also some losses. So nothing too interesting, you know. So that 10 a.m. is really the golden goose for this guy.
Yeah, totally. And this trader, for example, he could look into this further, open the basic filters, and then drill down on the hour. Let's say we only want to look at the 10-hour trades. And what he then could do is go to the journal and see what is going on here. Or you could even go to the exit analysis, look at the trades here. Or if you just want to look at the 9-hour trades, 9 a.m. trades, you do that this way. And then we can see, okay, that's how those trades look like. Seems like even here, some of the trades, the target is too wide to reach them. Here's just a few ones. But again, if he would extend his targets, 1, 2, 3, 4 trades could have been twice the size of his average winner currently. And then it could look very, very differently here. So that's also something really interesting for this trader to investigate further, I think.
Yeah, it's just a matter of figuring out whether your edge is not there in the first 30 minutes or whether you don't execute your edge properly because you're, you know, so eager to get into trades. You have FOMO at trading day starts, time to make some money. Or maybe the volatility is so big or you get some fake out moves the first 30 minutes. So this is something that you need to investigate, but until you find out the reason, just stop trading the open.
I think this is a very good place to stop here. And I think we've identified the big issue for the trader. In the beginning, you suspected that this is something that we could improve. And clearly, we found a few data points that indicate that this might be improvable. What we then expect to see the drop of the win rate a little bit, which might not be a big issue. Getting the reward to risk ratio up is going to be, I think, where he will find a lot of potential profit that will then also boost his profit factor, his equity graph, and everything else.
The alternative strategies are his best friend in the coming weeks. And finding a good exit strategy is key to improving this guy's edge and many other traders' edges as well, as we have seen over the past 10 reviews or so.
Yeah, the alternative strategies are a very underappreciated video. We're going to do some videos about that feature because it's something that will help a lot of traders. So stay tuned for that. In the meantime, I hope you enjoyed the review. And we will make a follow-up review as this trader asks for another review in a few weeks. We are very happy to do that. Hopefully, we'll see some alternative strategies and hear the opinion of the trader about this review. Thank you, Moritz, for being here, and talk to you in the next video.